Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So Bitcoin on the 4-hour again we were testing down wicks below our horizontal level of support, also currently trading within that support zone. Obviously we need to get back above 47 to get out of it, and then realistically we need to be above 48 and a half to look like we can then well, say goodbye to this level at least for a period of time, and try and test some upside. But obviously it is not looking too great with the weakness down here. All I will say is that we haven't broken down for it yet. Obviously supports get weakened the more time you test them, but if the bears aren't prepared or able to literally take us and break us down from here, then ultimately we will probably have a squeeze to the upside, but that is not to say they won't take us and close us below this level, below 45 and a half. That's not to say that won't happen. It's just if they don't take the initiative soon, then we are just going to have to come and test some upside. We have got some bullish things going on. Obviously we've got our Ethereum Satoshi pairing looking like it's potentially bull flagging out here, and if this takes another leg up, this will actually look incredibly bullish. It doesn't look obviously so good on the USD value, because obviously Bitcoin is weak in USD value. But what we have got going on is stock markets looking extremely good up here. This was the top side level that we need to take out to see more acceleration. And I mean, realistically, the bull flag target of this actual bull flag could be even higher than the previous target that we had. But we'll just have a look just to see if it's how different it actually is. Yeah, it is significantly different, but yeah, it gets us above that 5,000 mark. I won't draw that on. I mean, realistically, I think a lot of market participants are looking at testing up to the 4,900 level before then seeing a consolidation stroke pullback. But yeah, we shall see. Nascoin looking good here as well, the Dow looking good, and obviously the actual real bellwether of the underlying economy not looking so good. That is obviously the Russell 2000 here. So yeah, Russell 2000 still back in its range, had a little swing failure above, came all the way down, tested below actually, a somewhat swing failure below, but to be honest I'd call this just really a wick. And then making moves back to the middle of that range. Here is some action. We've got some action going on here as well. A pretty aggressive move in the 10-year. We make a few more moves like this, we could potentially say the stock market is done, and we will see a crash. Yeah, literally a crash if we do see some more moves like this, especially over the next week or so. But that is not to say that will happen, but this is a pretty aggressive move. In the context of what is going on in the stock markets, you can view this as a risk on move. But there will be a point where we hit the pain point where basically the yield will be a bit too high for obviously markets to continue their upward trajectory. The DXY also recovering solely off this move here. Obviously bonds are just deferred dollars, so obviously if the if basically the yield you're getting is going up, then obviously that's i.e. the value of them going up in the future, then obviously the value of them gets dragged up in the present also. So we can see this is getting dragged up with the 10-year as well, which is like it's sort of conflicting messages there. We've got stock markets looking strong, i.e. risk on. We've got the bond market looking yields going up, i.e. risk on, but then the dollar going up, potentially i.e. risk off. But like I said, I think that's been dragged by the 10-year. There will be different factors pulling assets in different directions at different times, and I think it's the yield that's dragging the DXY up there. Oil as well, consolidating around this high, potentially looking to break up. If it does, then well, if it does, at some point it will become a problem for markets, but I mean we kind of know inflation is here to stay. in certain things at least anyway, especially with all the cool social economic influences on fossil fuels going on at the moment. That's probably going to give it structural support and almost certainly higher prices. So yeah, Bitcoin dominance as well, down at relative new lows. This is kind of, well, yeah, I mean, a lot of altcoins are doing. You probably noticed there are a lot of especially layer ones and certain altcoins, even Ethereum, looking good against Bitcoin at the moment, which is obviously dragging this down. Maybe we are going to get, maybe, just maybe, we're going to get that the first couple of months into this year, a recovery in Bitcoin, maybe a pump up towards 95,000 or 95, 100,000. The Bitcoin dominance does find its way down into this area, which, as you guys will know, this is the area where I think not. This is not financial advice, but it may be prudent. It may in hindsight prove to be prudent to enter what could be some massive altcoin gains, and then maybe we turn into a bear market around who knows, around March time. Who knows what will happen. But yes, what else do you want to look at? Yeah, that's pretty much it. That's pretty much all I wanted to look at here. Let's have a look at Stochastics. I mean, we need some help. We do need some help. But 4 hour looking, well, to be honest, it is pointing down, so I can't really say it's going to help us out. It is pointing down, so there is downward pressure on the 4 hour. 8 hour or so. Clicked on that by accident. There is downward pressure on the 10 hour. 12 hour though, turning up here. Daily looking to turn up, but then bi-daily down. 3 day still drifting upwards. 5 days still coming down sharply, and weekly, I mean, I have been saying a few times, once the 5 day and the weekly do turn back up, that could be the point that we do see basically a move at least to the top of the range. Let's go back to the 4 hour. The top of the range being basically 52, 53. I think that it could be telegraphed by the 5 day and the weekly turning back up. That is providing we don't break down from here and price action is down like the low 40s, because then I think the 5 day and weekly turning up at that point isn't necessarily going to signal a move back up to 52, 53. But if we do manage to hold it roughly where we are now, this does turn back up 5 day and weekly, then test at the top of the range, and then obviously we've always got the chance to break out the top of the range, but we obviously just play it level to level. Weekly coming down, and then monthly actually looking to turn down here as well, but we are incredibly early in this month, and if we do start to move up, obviously this will continue with the upward movement. So yeah, mixed bag, not looking great. Not really much to cling on to here, other than obviously, well, 12 hours, not too much. 12 hour daily, which are decent time frames. 3 day, I guess, looking okay. And then obviously we are waiting for this 5 day and weekly to turn back up. That would be, I think, the signal, in my opinion, 5 day and weekly turning up for a high probability test of this top side of this range that we're in. And then if it does get going, then yeah, we can hopefully blast through, put this range to bed, and then I think that a lot of bullishness will come into the market, because we are incredibly close to an incredibly important level to the downside if we break below here. So if we do get at least this next level away from it, things will start to look better, and then ultimately once we take out 58.5, 59, then I think basically everybody will start flooding in an attempt to basically catch the move to new all-time highs. Obviously we've got a very high leverage ratio at the moment. Maybe when some institutions in inverted commas start coming and buying, maybe the actual open interest will go up, which will then potentially the leverage ratio may just come down as a function of the open interest going up, as more spot buying basically. Maybe we'll have to see, but it is clearly a red warning sign, this leverage ratio. But at present we're not managed to break down, so So yeah, so there you go, guys. So yeah, that is it. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.